Hello, everyone. Can everybody hear me okay? All right, thank you. Let's all take our seats because we have an awesome program kicking off this afternoon. I am Ben Geman, energy reporter at Axios. Thank you for coming to our event on climate optimism in energy's uncertain future. I am also one half of the Axios Generate newsletter, so please make sure you subscribe. If you haven't already, you can subscribe to Axios newsletters at axios.com/newsletters. And for anyone following along on social media this afternoon, please make sure to use the hashtag Axios House. So yeah, we've got a stacked lineup for the rest of the day and for tomorrow. Our first guest this afternoon is an expert in the energy industry and a former Obama energy advisor. Please welcome the founding director of the Center on Global Energy Policy at Columbia University, Professor Jason Bordoff. All right, so let's kick this right off. Biggest piece of advice for the incoming president?
Well, it might depend a little on who it is.
What?
But in some ways, I guess one point to make is there are ways in which it shouldn't matter who it is. One thing that both political parties hopefully should agree on, not only that climate is an urgent crisis, maybe they do, maybe they don't, but there are serious concerns with how this energy transition, which is picking up speed, plays out in terms of U.S. national security and economic competitiveness. And I do think that's something we should be able to find some degree of common ground on. And so that means providing certainty to investors domestically, that the stability of support from the IRA will be there. It means making it easier to deploy capital with that support. So we need to make it a lot easier to build infrastructure in this country with permitting reform measures. We need guidance to come out more quickly from the government to give companies some certainty about the availability of those tax credits. And we are now looking at the energy transition through the lens of great power competition.
Yep.
And tensions, rising tensions between particularly the US and China. And we know that whether it's solar panels or EVs or critical minerals or batteries, China has a dominant market share in a lot of these sectors. Building the capacity to do more of that at home and diversifying those supply chains is in the US national security interest. It's in our economic competitiveness interest. It's also what we need to do to accelerate the energy transition. And related to that domestically is grid modernization. And that was important for the energy transition before because we're trying to scale renewables, which are intermittent into the grid so quickly. It's taken on a new urgency now with the revolutionary technology of artificial intelligence. And we lost muscle memory with how to meet growing electricity demand in this country. It hasn't grown for 20 years. And now the projected growth rates are 2x, 3x what we thought. And we know we're in a race with China for leadership in emerging AI technology. These investments in meeting the electricity demands for data centers and AI are existential for the big tech companies. They will find a way to do it. If it's not in the US, it'll be somewhere else. And we should make it as easy as possible to build energy infrastructure here in the US. And we should recognize the need not just for a lot more renewables, which we need, but clean, firm power as well. That means nuclear, it means advanced geothermal. And the fact that 45 years after the 3 Mile Island disaster, a big tech company is reopening that power plant is a sense of how urgent this need is. I was just in Japan last week. They have a lot of nuclear power plants that can be turned back on. This country doesn't have that, so we're going to have to find ways to build that capacity additionally. And I think whether it's reform of the Nuclear Regulatory Commission or permitting reform or a host of other things that make it easier to build infrastructure. And the last thing I'll say, I'm going to go on too long, we have little time, is it is in our competitiveness and security interest to help accelerate the deployment of clean energy around the rest of the world. The IRA was historic for investment in the transition for what is 12% of the world's emissions, the US economy. Meeting the climate challenge means accelerating clean energy so much faster in the rest of the world. But that's not just a matter of altruism. It is actually the case, in my view, that if we're able to partner with countries, diversify supply chains, show emerging and developing economies that there are economic opportunities and benefits and export opportunities for US companies, that is actually a good thing from a competitiveness and security standpoint. And I hope we could find maybe some cooperation and agreement across the aisle on some of those things.
Thank you. So one thing I'm pretty curious about is the role of large incumbent energy companies in this transition, especially the large oil and gas companies. A year ago, you wrote about the oil industry. You said, you wrote in the New York Times, quote, "Contrary to their rhetoric, the behavior of these companies suggests that they believe a low carbon transition will not occur or won't be as profitable if it does." A year later, how is the oil and gas industry doing on climate change?
Well, I think what I wrote in the New York Times a year ago is as true or more so today. I think we've seen at least, and it's hard to paint with a broad brush, different companies are in a different place. It's important to have that caveat. But if you're going to paint with a broad brush, which is what we have 15 minutes to do, we have seen some companies that were leaning into the energy transition sort of publicly announce a slowdown or a pullback for the pace of investment in clean energy. And that's unfortunate because there's a lot of capital budgets, engineering expertise, project management skills to help advance those technologies that some of those companies have. And it is appropriate to have societal expectations that they lead, that they do more, that they're out ahead. It is also the case that there's only so far out ahead you can be. I mean, part of the reason companies are doing that is because they're not making money in some areas of investment in clean energy, like offshore wind or some other things. In some cases, they were penalized by shareholders for being too far out ahead. And so they're trying to send signals to the market that they perceive will get their share price up. And so that's why, in addition to social pressure, we need market pressure, right? We need to make it, if the best thing for companies to put more capital and move faster in clean energy is to see that there are strong economic returns and the market rewards them for doing that, doesn't penalize them. And that's why we need the whole system to change. We need to deploy clean energy faster. We need oil demand to start falling rather than continuing to rise every year, which is what it's doing today, along with gas and along with coal. They're all rising year after year for all the talk of the transition. And if that's the reality of the world we are in, it's understandable why investors are going to reward companies that continue to produce that energy. And of course, we're going to need that energy for decades to come. This is a multi-decade transition. But it comes back to what I talked about before. How do we both accelerate the pace of investment in clean energy domestically and deploy a lot of tools of investment support, reauthorization of the Development Finance Corporation is coming up. How do we de-risk investment in emerging and developing economies so that demand starts to fall for hydrocarbons and people see that in the long term there's going to be more economic rewards from investing in clean energy. So we need to both push companies to do more and create an environment in which, over time, it is increasingly in their economic interest to make that shift.
You know, one forum where these discussions always play out, and certainly we're going to see in kind of less than 2 months now, is at COP29. And so, I know that you've expressed concern in the past that the integration of climate action and foreign policy is really too rare at these UN summits and elsewhere. So, as we approach almost 10 years after the Paris Agreement was struck, is the COP system still kind of fit for purpose? And if it's not, what are some of the biggest changes that would be needed in that process?
Yeah, look, the UN negotiating process, roughly 30 years old, is incredibly important. We know we need cooperation across countries to make faster progress on climate change. But the world is changing. It is also a world now where competition can be as powerful a driving force as cooperation, and that is what a big motivator of the Inflation Reduction Act, a big motivator of China's industrial strategy over decades, was competition and leadership in emerging technologies. One thing that we've built at the Center on Global Energy Policy, and maybe just my own background at the National Security Council, is trying to build a home for expertise in energy, in the energy transition and climate change, with expertise in international economics, trade, sanctions, foreign policy. And I think everyone recognizes now you can't have an energy transition if you don't navigate these things, right? There is a tension between trying to push back on the dominance that China has in clean energy sectors and the cost of clean energy, right? A lot of stuff is cheap there. If you put tariffs on it, it makes it more expensive. That doesn't mean we shouldn't be concerned with 90% dominance, but we need to grapple with those tensions. And so it's frustrated me as you sometimes, I go to climate conferences like here or at COP, and then you're at the Munich Security Conference or somewhere else, and these are separate communities. They can't be. If we're going to have a successful transition, we need to bring those communities together. I think we have to continue to invest in the UNFCCC process, but I don't think it should be the sole focus of, say, U.S. international climate engagement. We also need leadership in an administration to coordinate all the tools of development finance, international economics, trade, because there are so many other ways in which the U.S., I mentioned the Development Finance Corporation before as one example of that. It's important that I think in a very senior way in the White House, they are coordinating not just domestic climate action, but coordinating all the tools of the federal government to really help to accelerate the pace of clean energy through the lens of national security, foreign policy, economic competitiveness, as well as the cooperation we need for the UNFCCC.
One topic that sits kind of smack dab at the intersection or the crossroads of these questions around geopolitics and climate policy is the pause on new LNG export permits to major markets. I mean, I know exports are going to grow no matter what, given what's already sort of been approved, but given the kind of geopolitical leverage that LNG does provide the U.S., should the U.S. resume approving these export licenses to major markets?
The federal law requires that before giving a permit to export LNG, the federal government make a finding that it's not contrary to the national interest. That's what federal law requires. You have to find it's in the national interest to approve that incremental permit. And so what is the national interest? You'd want to look at the concerns that our allies have. When I worked for President Obama, we were hearing all the time from Eastern European leaders and the Prime Minister of Japan who were showing up and saying, can we get access to U.S. LNG? It's important for our energy security. I was in Japan last week. There's a lot of concern about the pause because they are concerned about their energy security and where they're going to get their energy from. Climate impacts, and whether this is substituting for coal or renewables, whether methane emissions are being controlled, environmental impacts are also part of a national interest determination. What impact does increasing export volumes have on the domestic price of energy? Might be another concern. And we've gone from 0 to 13 or 14 BCF a day of capacity today. We're going to double that. Whether this pause stays in place or not, we're already doubling that. And there's even a question about how big an impact the pause has because everyone's projecting potentially an abundance of LNG by 2030. How many additional projects, even if the government said anyone can have a permit who wants one, how many additional projects are going to happen anyway? So I think it's appropriate for the administration to say, let's make sure that the evidence we have by which we're making those decisions is up to date, and that's what they're doing. And once we have that information, kind of decide whether to move forward with additional permits or not.
Thank you. I have kind of a climate relevant oil question for you, which is that lately or for maybe even a couple of years, we've been seeing some pretty stark divergence in the at least near to midterm oil demand estimates from OPEC versus the International Energy Agency. And I'm kind of wondering, given that we're starting to see this wide variance, is this a problem for energy transition policymaking? And if so, or is this a healthy thing that we've got a lot of different thoughts kind of bouncing around the kind of investor and policymaking sphere?
The variance in projections for oil demand growth.
That's right.
Yeah,
Future demand.
There's always some uncertainty. It's just a reflection of the world we're in now. We're in a different world, a highly uncertain time. In the past, whether you're an investor, a private equity firm, a large bank, or an oil company, you kind of knew that in the long term, oil demand was going up, not down. And maybe it's going to be 1%, 2%. There would be brief periods of economic downturn. Maybe it would be flat or fall or a pandemic, and then it would grow again. But there was no question in the long term it was going to be higher, and you wanted to invest accordingly. That's genuinely uncertain now. We don't exactly know when it's going to peak, and is it going to plateau, is it going to fall sharply, or is it going to keep growing because the demand from emerging and developing economies is so strong, and they need energy for economic growth. So I think that is just a period of greater uncertainty, greater volatility, and it presents risks, right? I mean, it presents the potential risk even of underinvestment. That if oil demand keeps growing and you're not investing, the consequence of that is price spikes, and then you cede market control or even influence the power, say, of countries that hold spare capacity to mitigate price volatility, because no politician wants oil price spikes. So when you pick up the phone and call Riyadh and say, can you please put more oil on the market quickly to bring gasoline prices down, because it's hurting the economy and our political re-election chances, that influence could be greater before, in the long run, it is certainly smaller. And so I think as interesting as the question of everyone asks, when will oil demand peak? It's almost more interesting to ask, when will we know that it did peak? Because we thought coal use peaked in 2014, and last year was the highest year ever. We thought U.S. gasoline use peaked in 2008. You can see headlines. And then, so if you see a year or two of flat demand, or even gradual decline, and everyone's like, peak demand is here, and then you pull back from investment, and then it turns out like something causes it to spike again, we might actually need to think about more tools, which could include government tools, to think about mitigating volatility in what is going to be a deeply uncertain, multi-decade, volatile period of transition. Because if there is volatility, if there are price spikes, if people are concerned about the affordability and reliability of energy supply in the process of this transition, I fear support for stronger transition policy could wane, right? As soon as the first thing that happens as soon as people see their prices, their bills go up, is they say, well,
very little tolerance.
Populist backlash against climate action. So that would help accelerate the transition.
That is a lot of food for thought. Unfortunately, we're starting to run out of time. So speaking of food, you are a lifelong New Yorker.
Yes, welcome to my hometown.
Yes. For folks that are either in from out of town or just looking for recommendations, as people are here for Climate Week, best place to get a bagel, best place to get a slice of pizza?
Well, so that's the wrong question. So the best, I think it's hard to say the best. One of the best bagels is one block from my house, Absolute Bagel up near Columbia. I say pizza because, so it was my birthday like 2 or 3 weeks ago, and my wife and kids said, where do you want to go for dinner? The next day, my parents, and the next day, some of my great colleagues in the Energy Center. And my answers were Shorty Tang's cold noodles with sesame sauce at Hua Wan in Chinatown. The next day, we went to Katz's Deli, and then the next day, Liebman's Deli in the Bronx. So those are my recommendations.
Sounds like a delicious tour. Jason Bordoff, unfortunately, we're out of time. Thank you so much for joining me.
Thank you.